The green marine fuel market expected to grow at a CAGR of 50.4% between the years 2023 to 2030. We have got 24 rolling out successfully in key hubs like Singapore, Hong Kong, Malaysia, China, and the demand is surging. We are talking about 155% revenue growth. We are not just selling a product. We are building a certified compliant supply chain. We are not just preparing for today's transitions, we are preparing for tomorrow. Investors still underestimate how much innovations and growth potential exists in our industry. Today, bunkering industry is at the crossroads. It's not just about delivering fuels anymore. It's all about carbon reduction, new sustainable fuels, new technologies, and new business models. Our true value lies with our management's vision and the ability to capitalize on these opportunities. BANL is building a scalable, future-ready platform that combines operational resilience with leadership in sustainable fuel. That's where our intrinsic value lies, and it's not yet been fully reflected in our share prices.
I'm David Byrne, and welcome to this Access interview by Accel Research. Today, we welcome Dr. William Chia, Chairman and Chief Executive Officer of CBL International, the listing vehicle of BANL Group, a bunkering facilitation company listed on NASDAQ under the ticker BANL. Welcome, Dr. Chia, and thank you for joining us today.
Good morning, David. Thank you very much for the opportunities.
Perfect. Before we get into the company specifics, could you start by briefly introducing your professional background and what led you to found BANL Group?
Oh, sure. Thank you very much. Well, actually, before diving into our companies, probably let me share a little bit about my own background and what brought me to founding the company. I have spent my last 20 years in the oil and gas industries, with a focus on trading, international network expansions, as well as integrating fuel supply chains. Earlier in my career, I had held senior roles at some major petroleum companies, where I have the opportunities to oversee international business development. Well, that gave me first-hand experience with challenges of global petroleum logistics, and it also became very clear to me how critical and reliable and efficient of bunkering services mean to the shipping industries. My experience also allowed me to have a comprehensive understanding of the entire bunkering supply chain. Now, in the year 2015, I have decided to take that experience and started BANL Group with a different visions. But instead of building an entire supply chain, I have chosen to focus on constructing a service-oriented, value-driven bunkering facilitation business. And that means that is one that prioritizes on network coverage and operational excellence, as well as the customer services, or what we call the one-stop solutions provider. And from that foundations, we have grown steadily into a global network. Today, we cover more than 65 ports, working with many of the world's top shipping liners. And as the chairman and CEO, and my role is actually to set strategic directions and to make sure we continue to differentiate ourselves through quality and efficiencies, always aiming to exceed clients' expectations while driving our sustainable growth. And alongside with my professional experience, I also hold a doctorate degrees in business administrations. I strongly believe in education is the core foundations for my visions and also my knowledge. Thank you.
Thank you very much. And for those less familiar with BANL Group, how would you describe the company's business model and what differentiates you from other players in the bunkering facilitation space?
Yes, I think bunkering is not a very commonly known business or industries. For those who may not know us well, BANL Group is essentially a marine fuel logistics facilitator. What that means is we provide a one-stop solutions for vessel refueling, helping the ship owners and operators to plan, arrange, and monitor the bunkering services for those traditional fuels, as well as increasingly for us is the sustainable fuels. What sets us apart is really our business model. We have a comprehensive and agile business model. Please allow me to elaborate further. First, our global network. We now operate across 65 strategic ports in Asia Pacific, in Europe, in Africa, and Central America. This comprehensive coverage, especially in the busy intra-Asia trade routes, gives our clients lots of flexibilities. it also allows us to be agile. So when there is a trade flows shifting, or when there is a service disruptions, we are able to respond swiftly. And second, we provide a true one-stop solutions. Vessels operations and schedules changes every moment. So when a client's vessel is traveling around the world, they do not need to worry about juggling between different suppliers, checking credit terms, or even whether fuel is available. We can handle all this within our supply network and we ensure smoother operations, as well as a hassle-free for our customers. Well, on the other hand, we benefit from operation scale. By aggregating demand across our client base, we are able to negotiate better terms with our suppliers. We are therefore able to pass on debt savings and the stabilities to our customers. And finally, we have been proactively on the sustainability front. We were one of the early movers in biofuels. We secured the ISCC certifications and launched our B24 blends in ports like Hong Kong, Singapore, multiple ports in China, as well as in Malaysia. Well, shipping companies are currently under pressures to meet increasing complex emissions regulations. Therefore, pioneering in sustainable fuels has actually positioned ourselves to be a trusted partners of these shipping companies. So in short, BANL is differentiated by our global supply network, differentiated by our one-stop facilitation model, and differentiated by our first mover advantage in sustainable fuels. Thank you.
Understood. Looking back at the last 24 months, BANL has significantly expanded both its volume sold and geographic reach. Could you talk us through that growth journey?
Oh, sure. Well, looking back over the past 2 years, BANL has been on a real growth journey. When we were listed in March 23, we had coverage across 36 ports. And by June 25, we have actually expanded that to 65 ports. And that is a good 81% increment. Our presence now covers in Asia Pacific, in Europe, in Africa, and Central America. Besides that, we are also entering into new emerging markets like in India, in Mauritius, as well as in Panama. This will allow us to capture demand from the changing trade flows as well as any geopolitical shifts. And at the same time, we are also diversifying our customer base. The container liners used to be our sole segment of customers. Today, we continue to serve 9 out of the world's top 12 container liners that represent nearly 60% of the global container capacities. We have also broadened our coverage into bulk carriers and tankers now. And as of the first half of 2025, the non-container clients account for almost 37% of our revenue. And this diversification has been a stabilizing force for us, especially as you may see today, the trade patterns have been seriously disrupted.
Mm-hmm. Understood. Moving forward to the first half of 2025, despite overall revenues being relatively stable, we saw some dramatic changes year on year on a regional basis, with strong mainland China growth offsetting major year-on-year declines across other core markets such as Malaysia and South Korea. Could you provide some additional context as to what was driving this regional revenue concentration at the same time as we had diversification happening on the client side?
Sure. Well, taking a closer look at our figures for the first half of 2025, even with the oil prices coming down, our overall revenues was relatively stable. And our volumes actually grew close to about 10% year on year. As you mentioned, regionally, we saw some dramatic shifts. Mainland China grew very strong, up more than 25%. Well, our demands are actually very dependent on the vessel selling patterns of our customers. So we believe a big driver was the trade tariff, which reshaped trade flows and created a rush for exports. And furthermore, we see 6 out of the top 10 ports in the world are actually located in China. That gives a very good reason why we see a hike in our supply in China. But most importantly is our intensive supply network is allowing us to respond swiftly to capture the demand. So even though the number shows a regional concentration in China, the bigger story is actually about our diversifications. Our customer base is broader, our port network is more extensive, and we are also the first mover in sustainable fuels. Our biofuel sales grows more than 150% in the first half of 2025. So what you are really seeing is we are leveraging on our flexibilities, asset-light models to tailor to the customer demand. Wherever they go, we serve them, turning global volatilities into an opportunity for us. Thank you.
Right. You mentioned already non-container sales growing. So they accounted for 36.9% of revenue in the first half of 2025, reflecting, as you mentioned, progress on customer diversification. How does BANL plan to further grow non-container liner customers while maintaining strong relationships with its core container liners?
Well, thanks to our network expansion in the last few years, we are able to provide reliable and flexible supply arrangements for our non-container liner customers, like the bulk carriers and the tankers. Well, also thanks to our network expansions in the last few years, we can effectively and efficiently serving the non-container liners customer where this vessel has less predictable schedulings as compared to the container liners. So meanwhile, as said earlier, we continue to service 9 out of the top 12 container liners, which represent 60% of the global container fleet capacities. CBL has always been actively targeting new customers, including mid-tier ship owners, bulkers, and tankers. And now our customer diversifications has actually reached a significant milestone. The non-container liner sales has become an important segment for us, which account for about 36.9% of our revenue. Our sales concentrations from the top 5 customers has also declined from 60.4% from 66.7% last year.
Right. Looking longer term, what does the 5-year plan look like for the business, and how might the business model evolve or change over that period to 2030?
Well, that's interesting. I think despite the challenges posed by uncertain global economic conditions, global volatilities, and as well as the regional crisis, our gross profit had remained stable. And in the first half of this year, we had successfully reduced our net loss, we have successfully diversified our customer base, and successfully improved our operational efficiency and cost management. These strategies and measures we implemented has proven effective in navigating us through these turbulent times. And our strategies will be continuing to strengthen the service network, growing our sales volume, and further explore the sustainable fuels. We will continue to focus on our extensive supply network in Asia Pacific, and at the same time looking at strengthening our presence in the emerging market. We will also continue to target new customers and new segments while deepening our strong relationships with the current customers. And we will continue to promote stronger and more in-depth suppliers relationships. We will continue to ensure that we have adequate financial resources for our expanded business. In the past 12 months, we have successfully secured more banking facilities to support our growth. As well as for the biofuel adoptions, this is one of our core sustainability strategies. We shall focus on compliance with the latest carbon emissions regulations and further exploring of the biofuel products as well as to other sustainable fuels. We regularly exploring different verticals and horizontal integrations opportunities in order for us to strategically position ourselves to capitalize on any growth opportunities and to support our customers in meeting the decarbonization goal. Well, we want to grow BANL to be a full-fledged bunkering service facilitators. We strive for customer segments diversifications from containers to non-containers customers, from fossil fuels to biofuels to renewable fuels, and from Asia to the world. We are proud to build BANL into a well-rounded bunkering facilitators for the future.
Right, understood. On the corporate finance side, you mentioned a few changes there as well. So BANL launched a share repurchase program while also expanding its banking facilities, as you mentioned, by $50 million. in the first half of 2025. How should investors think about these initiatives as BANL looks to further expand its network and biofuel development?
Sure. Well, I think for the share repurchase program, that actually signals our management. We have a strong confidence in the company's intrinsic value. That also underscores our management's commitment to enhance shareholders' return. This is particularly true when the market valuations do not fully reflect our value, our growth potentials, and also our resilience. So prudently, we are having ample reserves to implement the purchase programs in a very suitable timings. Okay. However, repurchases will not be executed when we will only execute the repurchase when the opportunity arises, which is in alignment with the market conditions. We will always ensure that capital reserve for growth remains fully funded. While on the other hand, we have got banking facilities, which is to support the operational growth of the company. These include our trading as well as the network expansion. We will see whether biofuels or other sustainable fuels development requiring extra fundings. If it's needed, we will make sure we have sufficient support on that. But as of now, I believe our capital is sufficient.
Right. And mentioning biofuels, biofuel revenues surged 154.7% in the first half of 2025, with volumes increasing even more by 189.5%. How do you plan to leverage this momentum to strengthen your position in green marine fuels?
Right. Well, capitalizing on the 154.7% revenue surge and close to about 190% volume growth in biofuel sales for the first half of the year, well, CBL is scaling our biofuel offerings across key maritime hubs, including Hong Kong, Shenzhen, Guangzhou, Yantian of China, Port Klang of Malaysia, as well as in Singapore. So the company's ISCC EU and ISCC Plus certifications also ensures a compliance with evolving international regulations. Building on the current foundations, we are also looking into expanding our portfolio beyond biofuels by actively exploring LNG and methanol supply chains. These alternatives represent critical pathways for vessel operators facing tighter IMO and EU regulations for decarbonizations. And with the green marine fuel market expected to grow at our understanding is a CAGR of 50.4% between the years 2023 to 2030, CBL is actually well positioned to capture the opportunity through our continuous innovations as well as our strategic collaborations. We will also be looking at investments at the what I call in verticals and horizontal supply chain integrations, and the company is aimed to continuously increase the proportions of our biofuel and other alternative fuels in the near future. So CBL is actually transforming our sustainable fuel momentum in a long-term prominent market player. So we will be combining the certifications credibilities, fuel diversifications, regulatory foresight, as well as customer-aligned solutions. These strategies will ensure CBL remains at the forefront of the green energy transitions in the global marine logistics.
Right. And you mentioned other types of sustainable fuels. So biofuels are just one part of this broader sustainable fuels transition that's taking place across the sector. How is BANL preparing for this broader transition? What's it doing in terms of other sustainable fuels?
Yeah. So for us, I think biofuel story is just the opening chapter. Right now, we are deeply entrenched in scaling our biofuel operations. We have got our B24 rolling up successfully in key hubs like we've just mentioned, Singapore, Hong Kong, Malaysia, China, and the demand is surging. So we are talking about 155% revenue growth in this segment in just the first half of this year. But we see this is only our foundations. So what we are planning for the next, first, we are actually building on our biofuel foundations. We are not just selling a product. We are building a certified compliant supply chain. Our ISCC certifications are like our passport into the future field. So they give us and our customers the trust and also the verifications needed to navigate through strict regulations like EU ETS and Fuel EU Maritime. And secondly, we are actively exploring the next generations of fuel. Biofuels are fantastic drop-in solutions for today, but we know the market is looking for LNG, methanol, ammonia, and more. So we are already in the early stages of building partnerships and to understand the supply chain for these fuels. We are positioning ourselves to be the partner that can guide our customers through this entire journey, from traditional fuels to biofuels, and eventually to whatever the next big thing might be. So finally, and the most importantly, is we are building trust and reliabilities. This transition is just not about having the right product. It's also about having the operational expertise, the digital system for tracking and compliances, and also the financial flexibilities to make it all work. So our expanding network of over 65 ports today isn't just for our business now. It's actually the physical backbone that allows us to distribute these new sustainable fuels whenever and wherever our customers need them tomorrow. We are also regularly exploring investment opportunities into verticals and horizontal supply chain integrations, so that in short, we are in the process of building a business that is agile, certified, and customer focused. We are ready to pivot and scale when the technologies and regulations evolve. We are not just preparing for today's transitions, we are preparing for tomorrow.
Very interesting and prudent strategy, I think. From your perspective as the CEO of an international bunker service facilitator, what global trends do you see shaping the industry, and how is your company positioning itself to take advantage of those?
Well, we're just sharing a few the industrial observations and what we see that may be happening. First of all, we see that there's a resilience in container ships amid fleet expansions. The global container fleet has been increasing by more than 10% in this year compared to last year, driven by new vessels deliveries and also the demand generated from the diverted routes. However, I think the growth is also tempered by trade policies volatilities, which could temporarily dampen volumes. But these will also spur regional trade realignment towards intra-Asia as well as the Euro-Asia corridors. And second, what we see is the geopoliticals and the trade dynamic. Red Sea's crisis has disrupted the entire routings, so extending the voyages by 10 to 14 days now, having gone through the Cape of Good Hope. That actually increased the bunker demand at alternative routes. Now, US tariff has redirected the trade flows as well, boosting intra-Asia as well as the Euro-Asia's bunkering demand. But that will also create some near-term volatilities. And third, in terms of carbon emissions recovery as well as the regulatory accelerations, we see that the carbon emissions in ocean shipping are actually improving post-2024 peaks, aided by road normalizations as well as the adoptions of low-carbon fuels. And the IMO 2023, the GHG strategies, EU ETS, Fuel EU Maritime are also accelerating biofuels adoptions. So green marine fuel market is projected to grow at a 50.4 CAGR as mentioned. In terms of the biofuel and sustainable fuel adoptions, we see that the biofuel demand has surged 155% as in our case earlier this year, driven by regulatory compliances as well as our customer needs to decarbonization goals. So also we see that the Mediterranean ECA implementations in May this year requiring a 0.1% sulfur fuel that may further boost the ultra low sulfur fossil fuel as well as the bio-blended bunker demand. As for the company, our strategies preparations, first we will be looking at the network expansions and diversifications. Today we scale to 65 ports in our supply network globally. We'll be focusing on high growth hubs such as Asia Pacific as well as the AIA regions in order to capture rerouted demand and tariff-driven trade shifts. We will reduce our customer concentrations expanding to other segments like the bulk carriers, tankers, and as well as other mid-tier ship owners. We will also be pioneering in biofuels and ensure compliances readiness. The company is actually expanding our partnerships and as well as collaborations with biofuel suppliers and producers of UCOME as well as UCO, particularly in the Asia Pacific region where we have very strong existing supply network. We plan to maintain our ISCC EU and as well as ISCC Plus certifications in order to ensure that we compliances with the increasing stringent requirements in Europe and globally. Okay. Next, we will also be sharing and also assisting our customers onboarding and to support them in easing the transitions to biofuels. Well, this to include the possible technical assistance on handling and sharing the information on combustion characteristics of the biofuel plants. Meantime, the company is also exploring the opportunities in other sustainable energies supply chain. In terms of financial resilience and also our flexibilities, the company is preparing ourselves for future development of tomorrow. We have secured ample banking facilities to fund our working capitals and possible growth initiatives. Our market is challenging and comparative. However, we strongly believe our current business model has proven to be prudent and is able to navigate through these stormy waters. For technologies and the risk mitigation side, we have been proactively leveraging with IT tools for our credit and risk management. We also implement real-time order tracking, advanced monitoring systems to ensure our operational efficiencies. We're utilizing market intelligence tools to avoid any escalation vessels, ensuring strict compliances while minimizing our geopolitical risk. So as the CEO of the companies, I see obvious trend that the maritime industry is actually navigating through a historical transitions toward a new frontier calling for sustainability and trade realignment. And CBL is positioned to capitalize through our Agile network, biofuel expertise, as well as our disciplined financial management. CBL is regularly exploring different verticals and horizontal integrations opportunities. And the company is also firmly believing in the future demand for the sustainable fuels and regional trade shift. So we are well prepared, well positioned to receive these transitions.
Right. So we've covered quite a lot of ground already in today's interview. Just before we wrap up, what's one thing that you feel the investment community still misunderstands or underestimates about BANL?
This is very interesting. Well, I think one thing the investment communities or what they call investors in general still underestimates about BANL is just how much innovations and growth potential exists in our industry. Many still see us as a very traditional and a sunset industry. But today, bunkering industry is at the crossroads because of the energy transitions. It's not just about delivering fuels anymore. It's all about carbon reductions, new sustainable fuels, new technologies, and new business models. Our real value cannot be fully captured in today's P&L. And our true value lies with our management's visions and the ability to capitalize on these opportunities. Well, the pandemic few years back and the present global tariff hike had not been stopping us have not been stopping our growth. The resilience during these turbulent times and the strategic values of our global network, as well as the asset-like model, are often being overlooked. Yes, during our expansion phase in the financial year 2024, margins came under pressure. But what we were really doing was laying down a solid, sustainable, and competitive foundations. And that's now showing results. Well, in the first half of 2025, we grew volumes by nearly 10%. We improved our gross margins, and we narrowed our net loss by almost 40%. Those outcomes prove our investment in the network expansions, as well as the biofuels, are starting to pay off. Well, and over the 65 port networks is more than just coverage. It gives us the ability to immediately capture opportunities when trade flows shift, be it the Red Sea rerouting or the US tariff disruptions. And we have been in early movers in sustainable fuels, securing the ISCC certifications and launching biofuel plants. That actually positions us as a trusted compliances partner for the shipping companies when they are facing stricter regulations. So, while the market sometimes focus on short-term margin fluctuations, what they are actually missing is the bigger picture. BANL is actually building a scalable, future-ready platform that combines operational resilience and with leadership in sustainable fuel. That's where our intrinsic value lies, and it's not yet been fully reflected in our share prices.
Right. I think that more or less brings us to the end of our time together today, Dr. Chia, but I'd really like to thank you once again for taking the time to speak with us today. We really appreciate your insights and look forward to following BANL's journey as the company continues to grow and innovate in the global bunkering and sustainable fuels market. So this now concludes the interview. Thank you and goodbye. And thank you once again.
Thank you, David.
Bye-bye.